Welcome, friends. My name is Jay. I'm just another trader just like you, trying to figure out what the price action is going to be for a particular stock. Today, we're going to talk about NVDA. NVIDIA is the backbone of the AI industry, very important stock. However, the market's all been going down. The S&P 500 looks like it's in a technical downtrend. So we want to be extra careful with buying any stocks. I'm a believer of buying great stocks for the long term. The stock market is the best way to generate generational wealth. However, I think we can sidestep a lot of pain if we analyze, do a little bit of homework to analyze what the price action on a chart is telling us. And so I'm just going to share my thought process, break it down for you, and hopefully you can get something out of it. I'm not a Mr. Know-it-all by any means. I've just learned a lot of hard lessons along the way, picked up a few tricks, and I'm just going to demonstrate some of the tricks that I learned and show you on a chart. Today, we're going to pop open NVIDIA and walk through it. And then after that, I will show you the bigger picture of the broader market. And we're going to talk about the S&P 500 and see why I think the S&P 500 has a good chance of a bigger drawdown. I mean, that's not what people want to hear, and certainly not me too, because I'm all for a bull market. However, we are in a technical downtrend. I want to talk about how far possibly we can go down before it reverses back to an uptrend, and then we can all start buying and making a lot of money. My go-to place is TradingView, my favorite charting software. And look at that, there's a Black Friday special. This is a great deal, guys. I pick this deal up every year. I pick this up. But that aside, let's click on my watch list. And here is my active trading watch list. I will clean that up. But for now, I'm just going to click NVIDIA. All right, so here's NVIDIA. And we're looking at the daily chart. These are exponential moving averages. EMA is the more recent prices have higher weights in calculating the averages. So I drew here the 5, 13, 20, 50, 200. You can copy these. And you can see that the EMAs look pretty nice. You have the 50 over the 200, which means we are in a pretty nice uptrend, right? However, you can see that it peaked here and it's coming down here. So today's objective, today's mission is going to be looking at possible pullback levels to buy. Safer levels, cheaper prices, which are safer and in the long term is going to be more profitable. I know a lot of people like to just dollar cost average and just blindly guess and just automate it. And that's okay too if your time horizon is 20, 30 years. But if you're looking to invest and be a little bit more choosy on picking better price levels, then that's what I will go through today, break it down on how to find lower price levels to buy. So I'm going to close that. Now, the first thing is, let's take a look at if there are any obvious gaps. So there is a gap here. A gap is basically where the price jumps the next morning, right, from here to here, and there's empty space. And usually gaps get filled, meaning the price comes back down, and then to fill that empty space, right? So uh, it's an area that's magnetic, so the prices come down. So I see that the gap was filled here for this because the price came down and went back up here. However, we have a gap here, so I'm just going to mark it with a horizontal line, green for supports. Okay, support level is where the prices might come down, and then if the support level holds, the prices will bounce back up off of that. Here's another gap right there. So I'm going to put a gap there. Now, if you look at that, and obviously there's another gap here. So there's quite a few gaps down. However, above all of that, we have a very strong support, which is a 200 EMA. Okay, moving averages are also support or resistance depending on where price action is, right? So the price right now is above the 200, which is a support. If the price is below one of these EMAs, then that acts as a resistance. And so we have the 50 here above it, and this is a resistance. All right, so the price has come down to about 178. And so let's look at where the next buy levels might be. I'm going to add another indicator here, and this is the RSI. It's called the Relative Strength Index. Let's pop that open. And I'll leave it here at the bottom. Actually, I'll move it to the top. And so the Relative Strength Index tells you how overbought, oversold it is. So generally, if it's down towards 30, that's pretty much the lower bottom threshold. That means it is oversold. And if it's over 70, then that means it's overbought, right? So right now it's at about 41. So it's getting down to the point where it's oversold. A lot of the stocks are because the S&P 500 broader market has gone down quite a bit. All right, so we have the moving averages, we have the 200, and what I like to do is draw trend lines first. All right, and so we can see that up until its peak at the end of October, it's been on an uptrend. So generally, we would draw a trend line below like this, and so the price action stays above, and this acts as support. I'm going to take that off. However, the price action is moving down. And we know because as long as we have a high and a lower high and a low and a lower low, that by definition is a downtrend. And the way you draw downtrends is you're going to take the high and then you're going to connect the next lower high. So here's the downtrend. And this is important because when price touches this downtrend, it's going to put pressure, a ceiling, resistance for the price action to bounce off and keep following the downtrend pattern until it breaks above it. Let me show you. This is what we're looking for the downtrend to stop and reverse. Generally, what we want, and if the price action goes above, breaks above, and generally what it does, it's going to retest, come back down. Okay, so now the downtrend acts as support as long as it's above. And if it bounces off the support, that's our confirmation that this is no longer a downtrend and we have reversed to an uptrend. That's what we want to see. Okay, and as long as we're in a downtrend, we want to be very careful on buying at lower levels. Let's take a look at some support levels. So we have the downtrend, we have the EMAs, we have the gaps below. So those are 3 out of the 4 main things that I use to determine price levels. Actually, there's a 5th. It's called the Fibonacci retracement. I'll show you that as well. But for now, you could just draw lines and have the program draw you the EMAs, the moving averages to connect the dots and put it all together and see where the best possible chances are at buying safer, better prices. And so I'm just going to draw support lines. So we have, if I draw a support line, say like right around here, You can see that price action respected this. It bounced off and then it came back up and then it bounced off here. So it acted as support, as resistance, right? And then support again, support again. And you could see that it closed, it went below, but then it closed above the support line. So it's respecting this support line. And this is definitely the 200 EMAs, another strong support line. All right. So 178 seems like a pretty good price target. However, if we bounce off the 178, it can come up here. Well, we still have the overhead resistance. So there might be somewhat of a relief rally where it's a slow pullback from the current downtrend. Relief rallies is your opportunity to sell out of your position for a profit or losing less money. Now, here is the other trick that I want to show you is drawing Fibonacci retracement levels. And the way I'm going to do that is switch to the weekly. So I can click the 5Y here and you can see we get the W. This is the weekly view. And I'm going to size it down a little bit here. And as you can see, here are the unfilled gaps on the weekly. And on the weekly, we're at, let me change the settings here for the RSI. I will remove everything here just so it's a lot more clear and obvious. There we go. So right now, the weekly, we're at about 55, which is about midway between overbought and oversold. Now, I'm going to pull up the Fibonacci retracement tool, and I have it saved here as one of my favorites. And you can see right here is the Fibonacci. So it's called the Fib retracement, and I will draw from the low to the all-time high. Now, you can see horizontal lines here, and these are going to give me extra price levels. All right. And the whole objective, right, is to line up to line up a lot of these signals as much as possible to give us a higher conviction. It's a higher probability that these support levels will hold, and these would be our ideal target buy levels. Okay, and we call that confluence of signals of different buy levels, whether it's a gap fill or a horizontal support or whether it's an EMA. So taking a look at this, we have a very strong weekly support at the 50. So the 0.50 retracement level. So what Fib retracement is the different pullback levels from the swing low to the swing high. So the price was here and it looked like it pulled back to the 0.236 level. And then the next level down would be at the 0.382 level at 165. And then at the halfway mark, which is 150. And by the way, 150 is a psychological price level because it's an even number and it's halfway. So psychological price levels are a good to just keep in mind, right? People like even whole numbers and also halfway points. So 0.5 is halfway, 150 is halfway between 100 and 200. And then you have another very strong weekly support here as well. Okay, so 135, this would be at 135, 150, and then you have another weekly support because it came down here and then bounced off, and this is at 165. Okay, so if you look at this chart, right, say you were like right around here, the price came down and it came down, say about 5%. And you're like, wow, okay, I wanted to buy NVDA. It shot up to 212 and then it pulled back to about, say, about 5% down at around $200. Let me just make sure that number is correct. Yeah, about $200. And you're like, okay, great. This is great entry point. Well, it's not because as you can see, when we're in a downtrend, right? And there's pullback levels that we can make educated guesses on making safer plays and better buys. And right here, 178 would have been a pretty, well, 182 and 178 would have been a better buy. Why? Because we had that daily support and the weekly support at this level, right? And you can also see that the green is the 20 EMA. So we have the green, we have the horizontal support level, and it's close to about the 0.236 level, all lining up. So that's a good buy zone. Another good buy zone is 165, all right, because there's a horizontal support, and then the 0.382 fib is lining up there as well. And then we also have 0.5 at 150. Why? Because we have the horizontal and the fib, the halfway mark on the fib retracement that lines up. So in a nutshell, when you look at the charts and you look at all these different signals, the horizontal line, the trend line, the gap fills, right? That air pocket, you have the EMAs, the 5, 13, 20, 50, and the 200. And lastly, you have the fib retracement. All you're trying to do is just line up these signals to give you the best chances, best probability. That's the game. It's confluence, right? You just want to put all these pieces to fit on top of each other. And the more you stack, the better support, the better your chances of the price being buying the price at a discount and playing it safe. Now let's switch back to the daily. Gonna expand that out a little bit. Here on the daily chart, let's not forget this very strong 200 EMA, and it's close enough to the fib retracement level here. So imagine if the price comes down, then I would expect this support to hold and the price to go back up. And hopefully it will break through, right? And then come back, retest, and then this will turn from a downtrend to an uptrend, especially if it hits this 200 SMA, I'm sorry, this 200 EMA, and it holds. Now, of course, we can pull back to a more deeper level at the 0.5. So it could do this and then come back up from there. And lastly, I would always check the monthly chart as well. And what I want to check on the monthly is it overbought or oversold? Number one. And you can see that at 68, it's up there. I wouldn't say it's extremely overbought, but it's something to be mindful about. So in the long term, it may be overbought, but I think in the short term, we're more concerned about the weekly and the daily, not the monthly. But if we expand this out, right, we have our buy levels here, we have buy level here, we have buy level here. You can see that it respected as resistance and then turn support, right? So this is a very strong monthly horizontal support level, and you can see that there's a EMA close to it, and then there's another EMA below it. So you can see that we are lining up these support levels very well with the horizontal supports and the fib retracement levels and the EMAs, right? And I don't think we have any major gaps to worry about right now. The gaps that we had drawn were down here, but those are way deeper retracements, right? Um, if we do get a retracement all the way down to 113, we'll be filling two gaps, but that's a much deeper pullback. I don't think we're quite there yet. Now, for the last part, I'm just going to switch to the S&P 500 and just quickly show you why it's important to always check in the context of the broader markets. For this, I'm going to use S&P 500. You can also use QQQ, which is NASDAQ. So I'm going to type SPX. Here we're on SPX, and you can see that 41. So we're getting down to oversold levels. Not quite there yet. I would say below 30, between 25 and 30, that's going to look a lot more convincing that the market's oversold. But in the meanwhile, what's really important is to look at the overall trend. So I'm going to close out of this so we have more room. And again, let's draw the trend line. We have high, low, high, low. So higher high and lower low. And so that will give us enough points to draw the trend line. Doesn't have to be perfect. Just connect the lines here, these two highs. And so here is our trend line. What I want to say about this, as long as the overall markets is in a confirmed downtrend, you want to be extra cautious about buying individual stocks. All right. Once again, the trend is your friend and you want to go where the trend is going. And if the trend's going down, that means just waiting it out, staying patient, sidelining some cash so you can buy all your favorite stocks at a much lower discount instead of catching falling knives, right? As the price keeps dropping and you keep buying, right? Then you're missing out on much lower prices as long as the overall market trend is down. How much lower can this go down? And so again, this is where we're going to do some quick analysis. And so I have again the same EMAs and let's draw some. I'm gonna start with going to the weekly here. And all right, you can see that there's a really nasty gap here, right? At 5718. And from today, that would be 13.41% drawdown. Doesn't sound like much, but everyone's panicking after a mere 5% drawdown. So relatively, 13% is a lot bigger than all the noise that's been out there about how the market is falling apart and people are panicking. Not saying we're going to get there, but let's do our fib retracement. Here we go. And you can see the gap fill is around the same spot here. And then let's draw some horizontal support and resistance. Definitely this was resistance. And then it broke through and acted as support. And then of course, 50 EMA lining nicely up with 382. It's great to know not just the daily charts, but the weekly and monthly. And essentially what you're doing is zooming out. And when you go from daily to weekly, weekly is a longer time period. So if you're more into swing trading over weeks and months, that's weekly. And if you're into really long term, like a year, many months or a year, then you would put more weight on the monthly charts. But I like to use it to see from a bird's eye and then zooming in. Okay, I'm going to switch to the daily. And then let's start drawing some local support. We have resistance and bounces, support. So this is definitely another horizontal support line, resistance line. And then we have here two goes up here. So this lines up very nicely with the 200 daily EMA. And we have another one here. Okay, you could see that gap. We have another gap here, by the way. So put some gaps here as well. All right, let's kind of make the space a little bit more narrow so we can see the price levels here. And so we are right here, and some target levels would be, let's just quickly look at this. We could potentially have the next level here, 2%, 2.5% drawdown, another 5% drawdown, and then the 382 level would be 6.71% drawdown. And I would say if we go into a much deeper pullback, we can have 11%, 10.5% drawdown. And to fill this gap, we would have about a 13.5 drawdown. Hitting this 0.618 level would be another 14% drawdown. And then, of course, here's another gap. If we go into a much deeper correction, then that's a 19% drawdown, right? Plus the five that we've already had, which would be about 25% drawdown. And we have seen that before. I'm not saying it's going to happen, but it's something that you want to be aware of, right? Always buy stocks in the context of the overall market trend. I think a lot of people miss out on that. Me too, especially. I'll buy stock and it's a great stock, great company, and goes down. And it's like, shoot, I should have done a little bit of analysis to see where the overall trend is. Because trust me, if the trend is up and you can buy anything and the prices are more likely to keep rising. But if you buy a great stock like Google and the market is all falling apart, then your choice was right, but the timing was off. All right. So the overall market trend is to get the timing right on whatever stock that you choose to buy. And just mind your gaps. All right. So I'm going to put another gap here. All right. So it looks like there's a good chance we're going to pull back down to 0.236 level. That's another couple percent. And then hopefully we'll get a bounce off the 200 and this local support level at another 5%. So the total drawdown would be from top to bottom about 10%, which is correction territory. And of course, if we get over 20%, then this is bear market. And if it gets down there, the trend line will extend down here, and you would just have price action getting pressure to move in a downward sloping fashion. That's it for today. I hope you found it helpful. I'll be doing more of these technical breakdowns to find better price levels to buy cheaper and safer and make more money over time. And we'll look at other popular stocks together, also the general market trend. And I hope that you get something out of this and kind of make it your own habit to do a little bit of due diligence so you're not just blindly guessing. This is more of an educated guessing and just following price action where the price is most likely to fall down towards. Take advantage of that to get it at lower prices.